In a world that's continuously being propelled by advancements in innovation and economic prowess, there are two Asian giants that are standing right at the precipice of potentially dominating the world economy in the years to come. While both these nations have diverse cultures and equally rich history and heritage, what we're going to be focusing on is their race to become fast-growing economies. So join me as we take an in-depth dive into understanding some factors that have led India and Indonesia to become two of the most powerful economies in the Asian subcontinent. Overview of India's economic growth. Despite the setback caused by the COVID-19 pandemic, India's economy is phenomenally skyrocketing, arguably becoming one of the fastest-growing economic powerhouses in the Asian subcontinent. According to a report published by the International Monetary Fund in 2022, it was identified that the country experienced a massive dip in its economic growth indicators, shrinking from 6.8% in 2022 to 6.1% in 2023. However, analysts have speculated that India will bounce back fast to 6.8% in 2024. Economic reforms and policies that have contributed to its growth. When the BJP, Bharatiya Janata Party, dominated the 2014 elections and came into power, Prime Minister Modi quickly jumped into action and focused his efforts on revamping the Indian economy. Broadly speaking, the reforms were divided into three distinct categories, such as trading of goods. Faced with massive foreign debt, the Indian government on more than one occasion has been seen as being somewhat on the back foot. However, the government was able to introduce customs policies, increasing duties, and domestic mandates. However, in the past 5 years, it has been seen that India is considering embracing international trade deals with its economic allies. Foreign direct investments. Modi's government has worked diligently and expediently to eliminate restrictions on FDI, directly collaborating with major investors. Domestic reforms. Since the past decade, the government of India has implemented potentially encompassing changes, such as its goods and services tax, where the government slashed the overall corporate tax bracket in an attempt to encourage entrepreneurship. Moreover, the government has also implemented tougher bankruptcy and insolvency policies. Key sectors driving India's economy. Agriculture sector. One of India's strongest sources of economic power is its agriculture sector. Despite experiencing momentous growth in a slew of other industries, the country's agricultural industry continues to be its lifeblood, accounting for the largest portion of its labor force. You'd be surprised to know that the agricultural sector employs over 50% of the country's workforce, contributing more than 17% to its gross domestic product, GDP. Manufacturing sector. India's manufacturing industry is another powerful factor that has helped the country flourish in recent times, contributing up to 15% to its GDP. India is regarded as one of the best manufacturers of chemicals, pharmaceuticals, textiles, food processing, steel manufacturing, transportation equipment, and biotechnology. Moreover, before COVID-19 hit India, the manufacturing sector was amongst the chief contributors to its GDP, 16% to 17%. The total output of India's manufacturing sector amounted to $443 billion plus in 2021, which is a 21% plus jump from 2020. IT and services sector. India's services or tertiary sectors comprise a wide spectrum of industries ranging from banking, finance, IT, energy, education, export and import, media, healthcare, telecommunication, hospitality, tourism, legal, and logistics. Despite agriculture and manufacturing being the backbone of India's economic prosperity, the country's IT and service sector contributes a whopping 60% towards its GDP. Their services sector includes a plethora of lucrative industries such as business process management, information technology, retail, real estate, and telecommunications. Plus, India is globally recognized for providing exceptional and widespread BPM services in a variety of developed nations, such as the US, UK, and Australia, amongst others. In terms of its IT and services sector, India is currently ranked 8th in the world with a staggering $1,500 billion per year GDP. India's demographic advantage and the potential of its large consumer market. India is on its way to becoming one of the world's most densely populated countries. According to July 2023 estimates, India's current population stands at more than 1.4 billion people. However, in the next 25 years, this number is projected projected to increase by 240 million. This demographic factor alone has tremendous bearing on the country's domestic markets, as well as the import and export of multifaceted consumer goods. As the population size increases, India's demand for more consumer goods and services will keep on inflating. After all, you'd be surprised to know that in the last decade alone, India's consumer market grew to $1.2 trillion. Exploring Indonesia's economic rise. An archipelago country, Indonesia is Southeast Asia's biggest economy. The population of the country consists of hundreds of ethnic groups. It's pretty amazing to see how Indonesia has come so far in terms of standing on the very edge of becoming an economic powerhouse, considering the devastating financial crisis the country experienced in the late 90s. Today, the country is ranked as the fourth most densely populated country in the Asian subcontinent and the 10th biggest economy, specifically when you talk about the country's purchasing power. In addition, Indonesia has also been able to successfully reduce the rate of poverty, slashing it by up to 50% since 1999. Before the COVID-19 pandemic hit the country, it had shrunk its poverty levels down to just 10%. Key sectors driving Indonesia's economy: energy and resources. Indonesia is a mineral-rich country and is home to a variety of mineral deposits, some of which still remain unprospected. In addition, Indonesia's mining industry contributes 1/10 of the overall GDP. The country also extracts its own natural gas and oil for domestic use and exportation. The exports help the country grow its foreign exchange reserves, which it uses to further finance numerous other infrastructure projects. Moreover, fossil fuels such as natural gas, coal, and petroleum are also among Indonesia's biggest sources of income. Manufacturing. Thanks to the government's deregulation policies to boost domestic and foreign investment, the country's manufacturing industry quickly became one of the largest contributors to its economy, accounting for more than 1/4 of Indonesia's gross domestic product. The country's manufacturing sector includes industries such as textile, electronics, automotive, and much more. A bulk of the manufacturing sector is operated by small and medium local businesses that are privately owned. Digital economy. Indonesia has a powerful digital economy. Thanks to its tech-savvy entrepreneurs and consumers, it is seen that the digital landscape of the country is being transformed into a hub of opportunities for both local and foreign investors. You have to understand that there are more than 150 million Indonesians online, a large number of which fall into the age bracket of 15 to 48, which means the country is experiencing a big boost in online business building space and is rapidly catching the US. This is proving to be very beneficial for the country's middle class. In addition, analysts speculate that by 2025, Indonesia's digital economy will grow to $100 billion. Indonesia's strategic geographic location and its role in regional trade. Looking at things from a geographic perspective, Indonesia is quite strategically situated, and the country's location provides it with a pretty powerful strategic advantage, especially when it comes to Indo-Pacific trade. Plus, one of Indonesia's major islands, Sumatra, lies right in the middle of the Malacca Strait, which gives the country access to the Indian Ocean. Growth trajectories of India and Indonesia. In terms of economic power, both countries are located smack in the middle of the Indian Ocean, and are both members of the IORA, Indian Ocean Rim Association, as well as the ASEAN, Association of Southeast Asian Nations. Both IORA and ASEAN are a launching pad for India and Indonesia to propel their economic growth. Plus, both countries have access to the trans-Indian Ocean trading lines, giving them trading access into both the eastern and western regions of the globe. Furthermore, combined, both nations have a population of more than 1.7 billion people. But what's equally interesting is the fact that the average median age in India is 27, while in Indonesia, it's 29. So this means that both countries are younger than China. In addition, both countries have a steady growth trajectory of 7.7% India and 5.5% Indonesia, and are continuing to experience rapid economic expansion. And while India's GDP is 71%, Indonesia has a GDP of 52%. A decade ago, Indonesia was vastly overlooked in terms of its economic advantages in favor of other powerful economies such as China and India. But that's not the case anymore. Being one of the largest exporters of commodities such as palm palm oil and coal, Indonesia has come a long way in terms of being economically reliable. And owing to its political stability, investments in infrastructure and industries, and self-reliance, the country now stands toe-to-toe with India and China. On the other hand, India has continuously maintained its place as one of the fastest-growing economic powerhouses in the world. And given that India's economy is larger than Indonesia, owing to its manufacturing, agricultural, and services industries, as well as being a consumption-based economy, India stands at the precipice of being self-reliant, which means the country doesn't exactly depend on exports. In other words, India doesn't have to rely on the global economy. Indonesia's competitive advantages: a younger workforce. Indonesia has a population of roughly 277,534,122, out of which a vast majority of people are under the age of 30. This means the country has a bigger pool of young and enthusiastic laborers who are self-reliant. Natural products. Indonesia doesn't have to export commodities such as oil and coal. It has reserves of both. Plus, the country also has large mineral deposits and materials such as cocoa, gold, nickel, iron, timber, spices, and much more. Geographic advantage. Indonesia thrives thanks to its strategic location. It has access to some of the biggest trading routes in the Pacific, which is what helps bolster its economic activities. India's competitive advantages: banking and finance. In contrast, India is the ideal place for foreign investment thanks to its dynamic and diligently regularized banking and finance sector. The country's banking sector is founded on the principles of sound legal framework and a vibrant capital market. IT and services sector. India offers a large network of IT services and technical management institutions, all of which are regarded to have the highest global standard. These institutions are responsible for developing highly skilled and educated human resources. Plus, India also has a vast population of English-speaking individuals, which is another plus in terms of business. Implications for the global economy. Private equity companies in India have proven themselves to be an excellent source of attracting foreign capital allocators, entrepreneurs, and tech companies, paving the way for them to dive into one of the world's fastest-growing economies. With a continuously growing market, which is quickly being formalized, the country no doubt holds extraordinary potential for high returns on investments for both foreign and local companies who want to develop differentiated yet market-led businesses. In addition, India's banking and finance governance has transformed into a very stable ecosystem. And along with its effective taxation policies, the country has become a ripe location for investors. In addition, a report from Morgan Stanley estimates that by 2031, the country's gross domestic product will probably double, potentially making India the third biggest economy in the world. On the other hand, recent data posted by the IICB, Indonesian Investment Coordinating Board, states that in 2021, Indonesia received more than $42 billion in foreign direct investments, which is the height in Indonesian economic history. Thanks to the country's deregulation policies, tax incentives, and massive mineral resources, Indonesia has secured a permanent spotlight as a foreign investment hub. For 2023 and 2024, the federal government is expecting further investments of $92 billion and $108 billion, respectively. Bottom line, while it's true that both India and Indonesia have recently exploded in terms of economic prosperity and development, it's also true that they still need to work around their complexities in matters such as addressing corruption and investing in campaigns to reduce poverty and promote social welfare. So that's it for today. Keep following us for more interesting videos.